Good morning. It's time for Monday's Market View, the second day of July 2018. In anticipation of a U.S.-China trade war, capital outflows from China are dramatically up. Saturday's morning's Tankan PMI showed a half-point drop to 51.5. Real estate indexes are down, and equities are in a marked decline, led by FTSE China's 3.8% drop. The Japanese yen this morning is still enjoying Thursday's excellent PMIs. Last night saw capital expenditures soar by 13.6%, but the manufacturing index fell by 3 points during the year's second quarter. In Europe this morning, we're seeing generally good PMIs from the Union's smaller countries, but stable to disappointing data from the larger ones. That's pushing down the regional number and, of course, the euro. Unemployment has fallen by a tenth to 8.4%. German retail sales on Friday disappointed, contracting 2.1% month-on-month. Britain's GDP was slightly up, but consumer credit shrunk to £1.4 billion. The nation's manufacturing PMI was revised upward to 54.4, but the sterling is falling. The reason? Reports from PricewaterhouseCoopers and the nation's industry confederation that show growing concerns over Brexit. In the U.S., data continues to improve. Thursday's GDP growth was down to 2%, but personal consumption increased by 2.3%. The Michigan Fed provided a 1-point drop in consumer sentiment, but the Chicago Bank posted a 1.5% increase in June's PMI. The Republican-oriented Chamber of Commerce is scheduled today to launch an anti-trade tariff policy. This as the EU warns Trump that retaliatory measures could hurt the American auto industry to the tune of nearly $300 billion. In commodities, amidst news of Saudi Arabia's economic recovery during Q2, oil opened the week with a $2 bear gap at the start of this morning's Asian session. That's despite Friday's 4-rig drop based on the weekly Baker Hughes count. The number has recovered since, but the pressure is on following U.S. pressure on Saudi Arabia to increase production. The country's non-oil economy has reportedly grown to nearly 4% of GDP. Meanwhile, gold continues downward, though there are signs it could consolidate in the 1250 region. Still ahead today, market and ISM manufacturing PMIs from the U.S. at 2 p.m. GMT, and Australia's interest rate decision tomorrow at 4 in the morning. Stay tuned for tomorrow's news, and in the meantime, happy trading.